Welcome to the Account Solutions. This channel is dedicated to bring you solutions to your everyday tasks in areas of bookkeeping, business administration, accounting, and taxation. If you like what we're doing here, kindly click on the subscription button and support us. Enjoy the rest of this tutorial. Hello everyone, good evening and welcome to the Account Solutions. This is Do You Know section.
Do you know? Do you know?
Hope you had a nice day at work today and your week went very well. Okay, so on this edition, I'll be looking at cash count. What is cash count? Cash count is an internal control procedure that ensures that balance of cash at hand, that's physical cash, that you have in your drawer, that you have in your safe box, is exactly the same thing as the balance of cash in your cash book or cash register. So cash count is when you go out and you take inventory of the quantity of notes, coins in the admin officer's drawer or in the petty cash officer's drawer or in the site manager's drawer where they keep physical cash, where they keep notes, bank notes and coins. You count them one by one based on denominations and you ensure that the balance they have in their cash register or the balance they've retired is the same thing as the physical balance they have in their cash drawer. It's very important to do that. Very, very important. Sometimes there's this temptation to tamper with cash. Okay, let me just take this money and I'll replace it next week before I retire it. Okay, it's there. So when you conduct a cash count, it helps to avoid things like this. So why talking about cash count? What comes to mind is cash on hand. Now, for some people or for most of the companies, cash on hand could mean both the cash in the office and the cash at bank. It means all cash and cash equivalent. That means whatever cash that you can easily convert, that are easily available for business transactions, they could be your cash. They are your cash on hand actually. But the focus for today's discussion is the physical bank notes that you have in your drawer. The physical bank notes in your drawer is what I'm calling cash on hand today. So physical cash on hand could be the cash sales from your operations. If you're into retail business, you buy and sell trading, and you receive a lot of cash from customers. So those cash sales form part of your physical cash on hand. The petty cash flow to give to the admin officer as the petty cash will be an impress system or not. They form part of your cash on hand. Any cash you keep for change, call it change cash. Let's assume you have an amount you've kept aside to ensure that customers that come to buy goods from your business, they have they have change. You can call it your change cash. You also have site cash. If you manage some, you're into construction or production and you have different sites and you disburse, petty cash to this site or operational cash to pay site laborers. Some laborers are paid on a daily basis and don't go through the bank. If you have such cash, in different sites, it's part of your cash on hand. And if there are any special kind of cash you keep, for example, you're an industry where there is high demand for cash operations, you have to maintain some special cash accounts in that business to enable you to meet up with the daily obligations of paying cash. And recently we have the ATM cards. Some companies, they open an account strictly for petty cash and they move money from their main bank account to this petty cash bank account, and they issue an ATM card to the admin officer or to the petty cash officer for daily petty transactions, which they can pay through POS or they withdraw and make those payments. This is now very important and should be classified as part of cash on hand. So we have 6 types as defined. There could be more cash on hand, but we've defined 6 types: the cash from sales, the petty cash, the change cash, the site cash, and the ATM cards, and finally the special cash. So why is cash count important? Why must you carry out a cash count? First of all, is to prevent losses in the business. 2, to ensure that there is no misappropriation. 3, to ensure that all receipts and disbursements have been properly captured. All cash receipts and cash disbursements have been properly captured, and to ensure that physical balance of cash is what it is. The way you have the amount you have in your cash register is the same amount you have in the cash drawer. You need to ensure that the policy on cash and cash handling is strictly adhered to. The policy on cash and cash handling is strictly adhered to. I did mention 1, to prevent losses, to avoid misappropriation, to ensure that your cash disbursements and cash receipts have been properly captured, to ensure that the policies around cash management and handling is strictly followed. And it's important to know that cash count is a very important element of internal control and also part of your cash control measures. Types of cash count. We can have periodic cash counts, which are done daily, weekly, monthly, or quarterly. We could also have the year-end cash count, that is the annual cash count. You could have a surprise cash count. Surprise cash count is when an officer who has been assigned the task of counting cash, visits a cash holder or petty cash holder without informing them. You just walk into the office and you demand that you want to see the cash register and you want to see the quantity of notes in their cash till. That is the surprise cash count. You don't announce your visit. You don't know you are coming. You just walk into the office and you start to count cash. Now, it's always advisable that surprise cash count policy should be part of your cash policy, so that the cash officers will be aware that at any point in time, someone from the head office or somebody from the accounts can just walk into the office and demand to cash the count. We also have the close of project cash count. When you are carrying out various projects at various sites and you want to close those projects, and you need to have a proper cash count and you reconcile cash book. So when conducting a cash count, it's very important that before the cash count you obtain the balance, to obtain the cash register or the cash book before the cash count. Establish the balance in the cash book. Establish the balance. Then you carry out a quick audit, a quick cash audit of the cash register. So in carrying out the cash audit, quick one, you have to review all cash disbursements and lodgement into the bank. You have to review them as registered in the cash register. You have to review all cash receipts or cash sales, cash from cash sales that have been entered into the cash register. You have to review all those things. Now vet the payment vouchers. If you have petty cash vouchers or cash disbursement vouchers or cash request forms, check the serial numbers if they are properly entered in the cash register and that no number is missing. So check them properly, and also try to vet the vouchers to supporting documents where necessary. Some petty cash transactions may not require supporting documents, but where they are required, also do that vetting. Also vet who received, if the control processes in the petty cash voucher has been followed. Somebody prepared, somebody authorized, somebody received, depending on the cash policy of the business. Just check all these things to be sure that the policies around cash have been properly followed. When you've done that, you now conduct your cash count using a cash count sheet. You record all the notes you've counted in their denominations into the cash count sheet. When conducting a cash count, ensure that the cash officer and you sign off on the cash balance as at the time you obtain the cash register to ascertain or establish the amount or value of cash in the cash book. Now, if you obtain the cash register a day before the cash count and they have had other transactions after you obtain the cash register, ensure you observe a cut-off procedure where you will check how much was in the cash book when I took the cash book, and before the cash count, are there disbursements have been made. You need to consider all those stuff, and do not ensure that the cash officer or the cash holder is with you when you are taking this stock and confirms with you. If possible, the cash count sheet should be 2, you record, and the cash officer also record. Both of you compare your records and sign off on both sheets. You sign on the cash officer's sheet, he or she will sign on your sheet also. You both have your copies. And when you are counting, you count every single note from 10 naira, 20, 50, depending on your currency. Count every denomination and record them in a particular row. If you count, for example, in Nigeria, we have 20 naira notes. You have 100 of 20 naira notes. So you put 20 in one column. Then the next column under quantity, you put 100 pieces, and the amount it comes up to, 20 times 100, the amount it comes up to, you write on the next column. So you count every denomination and how many they are, and the value. If you multiply the quantity times the denomination, what will you get? Record all this in your cash count sheet. What is a cash count sheet? Cash count sheet is a document used to carry out physical inventory of cash. It provides a summary of all the denominations, banknotes that are counted. Also enables the cash officers and the person accounting the cash, that's both parties, to sign off, and date the day they did the cash count, and it provides an evidence, or like what we call a cash certificate, that particular procedure was carried out either at the end of the week or at the end of the year. And also, the cash count sheet enables you to compare the physical cash counted and the balance in the cash register. So, the picture in front of you is a sample of a cash count sheet. It's important that this document is available when you're carrying out your cash count, and you sign off with the officer who is handling the cash. This supports on Excel templates that could enable you to keep proper cash register, either to accommodate ATM withdrawals and spendings or petty cash items. You can reach out to us. We support you with our dynamic spreadsheet that could just make your life easy. So that is it. Cash count for you. Ensure that you observe periodic cash count in your business. It helps to strengthen the internal control system and to avoid business losses. Thank you for joining us on this section, and we wish to see you sometime again next week. Alright, have a lovely weekend. If you're ready to subscribe to our channel, kindly subscribe and share or like. Support what we do here. Thank you and enjoy. Cheers.